Hi everyone, and welcome. Thanks for taking the time to join today. Month-end should focus on understanding performance, not chasing spreadsheets and fixing errors. Yet many finance teams still spend days collecting data, reconciling balances, and resolving intercompany differences. For multi-entity groups, consolidation often becomes the key bottleneck delaying reporting. The real question isn't whether consolidation gets done, it's how fast, accurate, and consistent it is each month. In this webinar, we'll explore why traditional processes are so slow and how to cut consolidation time to under 30 minutes. Most delays occur before reporting even begins. Teams spend hours gathering data from different entities. Accounts need to be standardized. Foreign currencies must be translated. Intercompany transactions need to be identified and eliminated. Then comes validation, reconciliation, and troubleshooting. Every manual step introduces additional time and risk. This workflow is familiar to almost every finance team. It may seem manageable with 2 or 3 entities, but every additional company adds complexity. More files, more adjustments, more opportunities for errors. The process scales poorly. The cost of manual consolidation is rarely measured accurately. Most organizations focus on labor hours, but the larger cost is delayed visibility. When management waits days or weeks for group numbers, opportunities and risks may go unnoticed. Modern finance teams automate the repetitive parts of consolidation. Instead of moving data between spreadsheets, information is imported automatically. Account mappings are saved. Intercompany rules are predefined. Reports are generated from a single source of truth. The process becomes repeatable and scalable. Reducing consolidation time depends on 4 areas. First, collecting data efficiently. Second, standardizing financial information across entities. Third, handling eliminations consistently. And fourth, generating reports without rebuilding spreadsheets every month. If these 4 areas are automated, consolidation becomes dramatically faster. The first step is eliminating manual exports. Instead of downloading reports from every entity, financial data should flow directly from your accounting systems into the consolidation platform. This removes a significant amount of repetitive work from every close cycle. One of the most common challenges is inconsistent account structures. Different entities often use different naming conventions. Instead of reclassifying accounts every month, mappings should be configured once and reused automatically. This ensures consistency and reduces manual intervention. Intercompany transactions create some of the largest consolidation challenges. Loans, management fees, internal sales, shared services. When elimination rules are predefined, the process becomes repeatable and significantly faster. The team no longer needs to manually identify and process the same adjustments every month. Once balances are consolidated, reporting should be immediate. There should be no need to rebuild spreadsheets or recreate reports. Finance teams should be able to generate group financial statements on demand. Now let's walk through an example. We'll start with multiple entities, import data, run the consolidation process, and review the final reports. The objective is simple: from source data to consolidated reports in less than 30 minutes. Let's assume it's the first business day after month-end. Our subsidiaries have already completed their month-end close. We have multiple entities operating across different countries, using different currencies and account structures. Our goal is simple: produce a complete set of group reports as quickly as possible while maintaining confidence in the numbers. Let's walk through the process. The first thing we need is access to financial data across the group. Traditionally, this means requesting trial balances, downloading spreadsheets, and manually collecting information from each subsidiary. In BrizoConsol, entities are connected directly to the consolidation workspace. Here we can see all companies within the group structure. Each entity is linked to its accounting system and assigned to the appropriate reporting hierarchy. Instead of gathering files every month, the financial data is already available within a single environment. As the group grows, new entities can be added without changing the overall consolidation process. This removes one of the biggest bottlenecks in traditional month-end reporting: collecting and organizing financial data. Once entity data is available, the next challenge is standardization. Different entities often use different account names and account structures. For example, one subsidiary may record revenue under sales revenue, another under turnover, and another under service income. At the group level, we need these balances reported consistently. Here we can see the account mapping configuration. Local accounts are mapped to a common group chart of accounts. The important point is that this mapping is configured once and reused every reporting period. Finance teams are no longer reclassifying accounts every month. As new transactions are recorded within the subsidiaries, they automatically flow into the correct group reporting categories. This improves consistency while reducing manual effort. Next, we review intercompany eliminations. Intercompany transactions are one of the most common sources of consolidation complexity. Management fees, internal sales, loans, and shared expenses can all create balances that should not appear in group reports. Within BrizoConsol, elimination rules are maintained centrally. Here we can review the elimination relationships across the group. The system identifies the relevant balances and applies the configured elimination logic consistently across reporting periods. Rather than rebuilding journals and spreadsheets every month, finance teams work from a controlled and repeatable framework. This helps reduce risk while improving auditability. With mappings and eliminations already configured, we can move directly to the outputs. Let's start with the consolidated profit and loss statement. Here we can immediately see group revenue, expenses, and profitability across all entities. Next, the consolidated balance sheet provides a complete view of the group's financial position after eliminations have been applied. We can also review the consolidated cash flow statement to understand liquidity across the organization. Beyond statutory reports, BrizoConsol provides management dashboards that help finance teams monitor group performance. Executives can quickly identify trends, compare entity performance, and investigate significant movements without exporting data into spreadsheets. The result is a single source of truth for both financial reporting and management analysis. Instead of spending days preparing reports, finance teams can focus on understanding and explaining the numbers. In just a few steps, we've moved from multiple entities and multiple account structures to a complete set of consolidated reports. No spreadsheet consolidation. No manual report building. No repeated account mapping every month. The process becomes standardized, repeatable, and scalable as the group grows. And most importantly, the finance team can spend less time preparing reports and more time delivering insights to the business. The biggest difference isn't just speed. It's consistency. Every month follows the same process. Every report follows the same rules. And the team spends less time preparing data and more time analyzing results. Organizations with multiple entities benefit the most from consolidation automation. Whether you're managing subsidiaries, regional operations, investment structures, or client groups, reducing close time creates immediate value. The goal isn't simply to consolidate faster. The goal is to build a process that remains reliable as the organization grows. When data collection, mappings, eliminations, and reporting are automated, month-end consolidation becomes predictable and efficient. Imagine starting your next month-end close with your entities already connected, your mappings already configured, and your reports ready when you are. That's the goal behind BrizoConsol. Visit BrizoConsol.com to explore the platform and see how your team can spend less time preparing reports and more time understanding them. Thank you for watching.